Hey, this is Jim. I'm going to share the SPY put forecast that I shared with members on Friday, June the 28th, for two reasons. Number one, we want to prove that the defamation that goes on a regular basis on the X platform is exactly that, defamation, all lies. And number two, to roast the haters so that they can fall asleep on their wet pillow, drowning in tears. Over the weekend. So all of this is confirmed through this messaging tool. We have screen captures of everything. Obviously, members know this is all true, but for the outside world, we have screen captures for everything. All of our systems in the back end are based on UTC, the Universal Time. And so that's why you see this timestamp 14, 45, 40, 46. I've converted it here to my time on the West Coast, Pacific. And so this was the message that the SPY, of course, had spiked up pretty dramatically early on the morning of the 28th. And so this message went out, SPY 546 strike puts expiring next week, June the 5th at $1.45. Normal size means this is not an all or nothing bet for me personally. This is like a, whatever size would be considered a normal size trade based on capital allocation rules for each individual person. People know what mine are. And then this one right here is what we're focused on in this contract above, the 545 strike puts that expired today, meaning June 28th at 13 cents. All or nothing size just means if I'm willing to risk X amount of my capital on a stop loss on a regular trade, I'll take that exact same amount of capital that I'm willing to lose on a stop loss, and I'm just going to bet that entire amount and leave it alone. It just works out better that way for surviving through wiggles and things like that, especially if I'm off working on other things in forecasts. So this would have been this 13 cent entry. Very quickly, and that came at 7:45 in the morning, and by 8:03 they had already spiked to 40 cents. The contract then consolidates a while, and then it spikes up to 87 cents. Again, this is from that 13 cent entry, 87 cents into 9:41. Again, PST, West Coast here in San Francisco. Then I sent out this message here at 11:51, and focusing specifically on these puts. Obviously, the 546 strike that doesn't expire until next week, we're doing and are doing really, really well too. But there was no reason to focus on those. We want to focus on the puts that were going to expire yesterday at the end of the session. So at 11:51 a.m. PST, message was SPY. 545 puts expiring today, entered at 13 cents this AM, has a speed line at $1.70 later today. Now, this is basically the setup. Members, a lot of them aren't looking at the actual contract. They're looking at the SPY. I'm looking at the put contract here and the pricing of the put contract, and just, speed line off the top of those two highs, the 40 cent and the 87 cent spike high, gives you $1.70 speed line contact if it moved up into the zone of strength perfectly. So I say here later today, and I like the strategy of a trailing sell stop at 40 cents in order to continue participating in the upside while protecting the open profit. So, always a good idea to take a little bit of profit on the way up, but sitting in the bulk of the position, still moving into 11:51 and toward a late session zone, a predicted zone of weakness in the behavioral analysis model. If we were to get an inversion, I wouldn't want to, give back all of those gains. So the point here was, for me personally, I like to use a trailing stop, 40 cent trailing stop at 40 cents. Never would have been stopped out prior to this big spike. Then what happens is I send this message out at 12:28 because I spotted an active algorithm in the SPY that looked like it was about to open what I call a trap door and have a cascade price decline in the SPY. If that were to happen, then of course you'd get this huge move up in the value of the puts. And again, we were already thinking that even though at the time the SPY puts were trading sort of in this 50 cent to 65 cent range, there was a window that looked like price could spike all the way to $1.70 really quickly. So send this message out at 12:28 p.m. If a downside cascade today and a speed line attack, meaning the speed line attack at $1.70 we talked about in this message, the algo should start the sell program at 12:32 p.m. PST. So here's the message right here, 12:28 on this bar. We trade 12:29, 12:30, 12:31, and this is exactly the 12:32 bar, and you see this huge melt up to attack the speed line at $1.70. Had an overthrow all the way up to $2.24. So basically 13 cents to $2.24 in one day, less than a day hours wise, and exactly down to the minute of when I had spotted that active algorithm that looked like it was about to open a trap door and plunge in the SPY, which it ended up doing, which of course then creates this huge price move to the upside in the SPY puts and attacks the $1.70 speed line that we had talked about over a half an hour earlier. So again, there was your 12:28 message. All of this is documented. And then that huge spike up exactly on that 12:32. And then you basically had just 1 minute, 2 minute, 3 minutes, and a portion of the fourth minute to top. So it was a full-blown, downside cascade in the SPY and a beautiful, beautiful trade here. So just wanted to point that out. If this is grifting, then I need to go back and revisit the techniques of grifting, because this is just backfiring as far as a grift. Good luck, everybody. Eat it, Tdog. Eat it, Corax. Eat it, Kiwi. Eat it, Chucky. Eat it, Dougie. Suck on that, Kenny.